Good morning, traders. It's 8:02 a.m. Chicago time on Thursday, the 22nd of June, 2017. Thanks for joining us again. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance today is, again, slightly on the risk-off side, but not by much. Most indices are down by just a few ticks. The laggard today against Euro stocks. The Euro stocks 50 is down 10 points or 0.28%, followed by the Russell. The S&P minis are down 2 points, 0.08%. The leader today is gold. Gold's at $1,254.50, up $8.60 or 0.7%, followed by crude oil, which had a big tumble yesterday after showing a draw on inventory. It popped up to the mid of the gap and it fell right off from there. Just a beautiful move down. Hopefully some of you at least were able to watch that. Not much else to say about yesterday's session or the current market conditions. Crude oil is on track for its worst H1 or first half performance since 1997. Oil is down about 20% in 2017. Also yesterday, the New Zealand Central Bank kept its policy on hold, causing the Kiwi or the New Zealand dollar to spike up. Iron ore, which was taking a hit earlier in the year, has gained for 6 straight sessions. It's up 6.5%. For those of you who are into blockchain, I've been really interested in blockchain currency. There was a flash crash yesterday in Ethereum. It dropped down to $13 from about $300, and it quickly recovered to 296. Reminds me of the May 2010 flash crash in the ES. But the cryptocurrency just dropped to 13 bucks and came right back up. I've not looked at. I haven't had interest in Bitcoin, but Ethereum was much more interesting to me. And watching it crash yesterday was kind of an interesting thing. It shows that there's still some weakness there in the technology. Other than that, Oracle just absolutely crushes its earnings, is up 9%. The company earned an adjusted 89 cents a share on revenue of 10.94 billion, beating estimates by quite a distance. This morning, the ECB came out at 3 a.m. and said that the current economic recovery is proving to be increasingly robust. There's no change in stance at all. But those are good comments from the ECB on the European economy. Initial jobless claims this morning in the U.S. came in at 241,000 versus 240,000 estimated, so slightly worse. Continuing claims at 1.944 million versus 1.93 million estimated, also slightly worse. As far as what we're looking for coming into today, we just got the FHFA housing price index. Let's see what that came out at. That came out at 0.7% versus 0.5 beating. We're looking at 10 o'clock for the U.S. leading index for May, expecting 0.3. At 10 o'clock also we get the Eurozone consumer confidence advanced for June, looking for a reading of negative 3.0. And then we get natty gas at 10:30, and that's really it for today. We have Fed Speaker Powell at the Senate Banking Committee at 10 a.m. as well. So 10 o'clock today Eastern has got leading index consumer confidence in Europe, leading index in the U.S. consumer confidence in Europe, and Fed Speaker Powell. Let's take a look at what we expected yesterday versus what we got. So yesterday, the primary hypothesis was for the market to likely push down below the prior day's low, and then rotate back up. I was looking for it to target. I was looking on the bullish side as the primary hypothesis for yesterday. I was looking for the extended target of 24.4675, 24.47. Did not happen at all. The market looked pretty good on the on the long side early on. We had a pretty good move up. I'll show you that in a minute. But then it failed with oil as oil dropped hard. So did the S&P. Secondary hypothesis: chop around, sustain a bid from the open. In other words, no exploration of the prior day's low. Sustain a bid from the open, and then easily attain 24.47, our primary target above. That didn't happen either. What happened yesterday was hypo 3. So we had hypo 1 pushing lower than pushing higher. I'll go over that in a minute. And then from there on out, from the time the crude inventories came out at 9:30 Central, 10:30 Eastern, the market started playing out hypo 3. Hypo 3 was expected to base around 27.50, 27 and a quarter, and then turn up on the close. That's what I was looking for. Here's what actually happened. We had an open auction. We had our dip down below the prior day's range. But then from here on out, there was nothing. Hypo 1 was dead. The best setup yesterday, talked extensively about it. The best setup yesterday was right here into the short of the mid, into the 24.35. Took about 4 ticks of heat for a target of 24.30.50. So about 5 points for the extension move. I saw this as an impulsive move down. Was looking for the consolidation and then at least an attempt at that low right here, 24.30. We get a little bounce and we get another extension, taking us down to the target for hypo 3, which was 24.27 and a quarter. We turned to 24.28, and then we started to go up into the close. The market closed inside of the prior range, just like we had intended or expected for hypo 3. There's hypo 3. We were looking for the market to close inside of the prior range. The prior range was down here. So I was looking for that, and that actually materialized. So we ended up with a bit of a weak local high on the close. You could see Delta was moving up. The smaller traders it closed in on the larger traders, the larger participants on the close. You can see the Delta's fairly strong on the close after being weak all day since this drop. And the market ended up the S&P ended up closing right against its mid, right against its point of control. The point of control migrated down. So this is bearish. We have a lower low. We have a lower low against the prior day's low, and an overnight. We ended up putting in a double bottom at 24.28. So the overnight low, as you see here, is at 24.28, which is in line with the prior day's low as well. So overall, this doesn't look like it's able to pick itself up. It looks weak still. However, knowing what the market has done, the probabilities are on the side of it seeking buyers, and then ultimately once it finds them, it's likely to rotate up. We are tangled up in this MC point of control that spans way back. This is actually, I'll show you that in the bigger picture. So since we are down into the prior MC, we move this MC forward. So as we walk this microcomposite forward here, let's pull that microcomposite in. As we walk this microcomposite forward, we see the point of control shift. Here we go, there it is. It's shifting up right there. And we are basically tangled up in this area. So we're back in the meat of this composite, back in balance. So we've pushed new highs. We went above 24.43.50 to 24.51.50 and have done nothing but responded back. So we've had responsive selling since the new all-time high, right back into balance. The prior spot for balance was down here, was in the 24.30 quarter. If you recall, the point of control for the MC was 24.30 quarter before this, and we pushed right through it, putting in a point of control yesterday, 24.33. The point of control has been migrating down, so you see it moving down. This is getting noisy here. So you see it moving, these pink lines. The point of control is just shifting down. So what this is saying is that the market keeps seeking those buyers. It is auctioning lower and lower and lower and accepting value, accepting to trade in volume at lower and lower and lower prices. That is by definition a downtrending market. And the purpose for the market to do that is to advertise for buyers. So it moves lower so it can look for buyers, and that's what we're waiting for. We're waiting for it to find the buyers and to start to turn up. Okay. Again, we're in an uptrend. So on a higher time frame, on the intermediate time frame, we're in an uptrend. On a day time frame, we're in a downtrend. So here's what we've done in the overnight session. On the overnight, we dropped right away, pushed right back to where we closed, and then we dropped again to 24.28 here, and are tangled in this point of control mid and VWAP. The delta shows almost neutral. The market's almost neutral here. The overnight inventory hasn't really done much. It's slightly below yesterday's close. But really, both sides are participating here, and the volume is 153,000, which is in line with what we'd consider to be common or normal. So nothing to speak of in the overnight session. There's nothing to glean here other than the fact that we've put in this weak low, this weak double bottom in the S&P. So coming into today, it's really difficult to tell. Let's turn off these flex levels. Coming into today, it's really difficult to tell which side has the better bias. We have some clear targets above and below. We are stuck in this big ass volume area. You see it right here on this profile, right? It's just a big area that's just balanced. It's just stuck here. We like these prices. We tested above and failed to hold these prices, so we started to shift down quite easily. The market did not have too much trouble getting below here, and you could see the delta on all of these days was to the downside. The sellers did not have a hard time pushing through to the downside, and so what this does is it has us opening in an area that is noisy. So we're in a turbulence zone here, a very thick zone. So this morning, the expectation is an open auction. I'm looking for it to give the MC point of control a shot. So this is where Hypo 1 and Hypo 2 sever paths. If we find resistance here, which I think we'll likely do, I'm expecting it to test below the prior day's low and push into that 24.27 get tangled up, and then try to recover at the end of the day. This is Hypo 1. Hypo 1 is bearish, looking for a downside spill, an impulsive move to the downside. It's not responsive. It's not initiative. It just is balanced. Hypo 2, same thing, open auction. Looking for it to push higher. If it finds a base and is able to get impulsive up and use that as a base, then we're looking for 24.41 as the key target above. That gives us about 9.5 points of range, and I'm looking for that to be a target. That'll be Hypo 2. Okay, so that's the bullish scenario. What differentiates them is, do we get this big push up? I mean, unfortunately, I don't have a way of predicting where the impulse is going to be. and to be ahead of it. Sometimes I can if we have a good solid zone, consolidation zone with a clear favoritism on the buy side, a lot of strength on the buy side. Icebergs are not on the sell side. I can jump in ahead of it and catch that impulse as it happens. But in most cases, I'm really a trader who's looking for the trend to show itself before I buy the pullback. So I'm always fading the counter move for an entry in the direction of the main move. Okay, so I need to see this impulse up before I start to look for an area. And just because an impulse is up doesn't mean I'll buy the high or I'll buy in that direction. I still need to wait, be patient, and find an area to lean against to go long. Like yesterday, the impulse up did not find an area to lean against. It was an impulse up and then it just came right back. It was 100% retracement, came back right back through. If I just blindly buy these impulses, I would lose a lot of money. So I'm looking for that to the upside on hypo 2. I'm looking for it to the downside on hypo 1. Hypo 3 really I'm looking there for a trend hypo, and for that I'm looking to the long side. So if we can take a dip early and then show some strength, we could very easily get above 24.41 and push into the 24.43.50, the prior high, and to the bullish side. Hypo 4 is the opposite. Hypo 4 is looking for 24.1975 to the downside. Okay, these are the kind of days that you know it's anything goes. We're in the middle of balance. We're opening right against the yesterday's point of control. We're in value. It's really just a market that could go either way. So be patient. Probably shouldn't trade for the first hour or so. Good luck today, and I'll catch you tomorrow. Take care.